Welcome back to Market on Close. The dollar finally slowing down its burn. Alan Nuckman joining us, the chief market strategist at Agora Financial. What do you think, Alan? Dollar down has been very positive for stocks these last 4 months. So is dollar sideways or up going to be negative for stocks?
It would be, but I don't believe this is for real. This was a baby bounce. It was just a little bit of an unwind because the market was so overloaded in one direction that the Fed's minute gave people an excuse to maybe think about the dollar stop going down. But I don't think this is for real. You could see that this reversal happened. This mini bounce you saw on the dollar. We're still between 92 and 94. But let's look at the euro currency. The euro currency on Tuesday made new year highs, and it's still around the 118 levels. So it's not that significant. It's just, I would say, a stall in this downward movement. Again, you got to believe the politicians that said they want a weaker dollar. They've gotten a weaker dollar, and I think they're going to continue to get a weaker dollar.
Hey, let's talk about those Fed minutes for a sec since you brought it up. It seemed like on Wednesday, as the market responded, it might have been an event, right? I mean, we got some moves there.
Right.
Bonds came off a little bit. Gold in particular really got the move. Gold was really the highlight. To your point, the dollar too. So what happened? That didn't last very long.
Exactly. People did get back into gold. Now, gold's had 2 weeks in a row of not moving higher. So that's significant. I think it hasn't happened since March or April. But we're hovering right around that 2,000 level and that midpoint of this latest leg that we saw here in the last couple of weeks. So let's see where we develop from here. Again, if the dollar goes down, then you're going to see gold go back up. Again, it was some profit taking in that metal market. And at the same time, it's all tied together, but we can get into the Fed minutes as far as what happened with yield. We saw yield bounce from 0.5 to 0.725. And now it's drifted back lower. Today it's gotten to the halfway point of this last little leg. So again, we saw some overweighted market that had a little bit of a shakeout of some of the weak hands were forced to take profits. A little short squeeze there, just like we saw the short squeeze in the dollar, and we saw the long squeeze in gold. So I'm not saying that anything's changed. We want to see how things react in the next week or two, but I'm looking to see what happens with the next attempt on the lows in the dollar and the highs in the euro currency.
So it looks like maybe from this logic, maybe gold is the one move that's held since minutes because gold dropped on that, went sideways on Thursday, and then we softened up a little bit again today. The dollar, too, I guess you could argue, has held on to some of its strength.
Yeah.
What was interesting is we got that stock pullback that's continued to Thursday morning, but then it just totally turned around. All NASDAQ, all the way, hasn't stopped since.
No. S&P too, my friend.
S&P's too, sure.
3399.9 or whatever. Didn't quite print 4,000 if you just look at the SPX.
What a record.
400 SPX. But it is a new record. So that's what we like to see on a weekly basis. New weekly record in the S&P, new weekly record in the NDX. And gold, the Dow's still holding up. It's not taking out its recent swing highs, but again, it's only 30 stocks. So the trends are continuing. We get these little bit of pauses, but then you're seeing the renewed strength in these trend directions. So talk about trends. I don't know if you noticed, but I finally cut my hair after 5 months. I didn't want to cut it because I didn't want to jinx the market since, I'm obviously Mr. Optimism. And so I had enough confidence to cut my hair once we made those new highs and a full V recovery. I mean, seriously, we recovered all of our losses in 2020. That is amazing. Absolutely. I don't know if it found it. I don't know, if the economics will bear out. But in the meantime, it's had a complete recovery like nothing happened.
Yeah. All right. I don't know about the haircut, Al. It looks like you got more on from the last time I saw you. Or maybe it's the slick back. You look like it looks good, Al. You got the outdoors, you got the chill and grill session here on this Friday. You're celebrating the new highs.
Well, the markets are almost closed. I can't. It's time. Ding, ding, ding. Ring that bell.
Hey, here's the question, Alex. I know you like to go and you find stocks that haven't been participating quite as much when the market's, burning up higher like this. So I was thinking about, our conversation at the top of the show with our guest, which is, if you don't want to worry about huge valuations and frothy price to sales and everything else for the Teslas and Apples and stuff, where do you go then? If you still want to have upside exposure, but not with all the risk.
I'm glad you asked. Now, this goes back to something else that I taught you many months last year. actually. The two-day rule. The two-day rule when Mr. Trump specifically targets a company and attacks a company. Obviously, that's wrong. Okay, Goodyear Tire. Goodyear Tire has been between $5 and $10 for the year. And so you can get the $7 call for January is going to cost you about $3. Your break even is like 50 cents higher. If it breaks out of that range from 5 to 10, it's going to 15. So I've seen a lot of smart money loading up in positions of Goodyear Tire. And again, a limited risk option. You have 5 months of time there. That's how I look to play. Now that stock is down.
Go long Goodyear. You're fading the tweet. You're fading the Trump tweet.
Yes, yes. How many times have we seen this? How many times have we seen this? So, and I'm doing with a limited risk option. So that's how I play. The $7 call is obviously in the money. The January option has 5 months of time. It's got a high delta. It's going to act like a stock. So that's how I look. It's a risk reward. Again, that stock is down 40% in 2020. So let's see what happens there. Let's come back in a couple weeks and see if Americans still like American tires.
All right, Alan Nuckman and his fresh haircut. Thanks, Alan, for joining us on this Friday.
If you're not long, you've been wrong.
All right, that's correct. Technically, that's correct. There's no arguing with it. Mr. Nuckman's got a good weekend ahead. I can feel it. Appreciate it, Alan, coming to us here from Chicago, Chief Market Strategist at Agora Financial.